Hello, and welcome to the November market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. October was a great month for the markets. Despite all of the scary scenarios around Halloween and the fact that October has historically been a tough month for the market, we actually hit new records for the S&P 500, and we got quite close with the NASDAQ and the Dow. U.S. markets across the board did very, very well, and international markets actually did even better. In fact, from an investor's perspective, the only markets that pulled back a bit were fixed income. And that was to a large extent because the stock markets were doing so well. And when you look at the headlines during the month, you might say, wow, how on earth did this happen? I mean, we have the impeachment, which worries people. We have weak jobs growth at the start of the month. We have business confidence pulling back. We have manufacturing actually starting to decline. You look at all of that and you say, how could this happen? But when you look under the hood, when you look away from the headlines, in fact, major sectors of the economy are still doing quite well. Consumer spending is over 2/3 of the economy, and consumers continue to earn more and to spend more. As long as consumers are spending, that means the economy is going to keep moving forward. When we look at confidence, for example, yes, we've seen it pull back a bit, but it's still quite high by historical levels. And when you take all of that and you say, okay, people are still spending, people are still out there working, and you add the fact that the Fed has actually gotten behind the markets and pushed with 2 rate cuts in the last 2 meetings, you say, okay, maybe it's not as big a surprise that we're doing as well as we are. And then when you look at the corporate fundamentals, in fact, things look even better. There's a tremendous amount of worry about there, but when you look at what's actually going on, things look better once again. We see corporate sales, what companies are selling, they're actually rising at a healthy rate. We're seeing corporate earnings doing much better than expected. Right now, of the companies that have reported, about 3/4 are beating expectations by a substantial amount. In other words, even given all of the risk, even given all of the headlines, nonetheless, the economy continues to move forward and companies continue to do well. Now, that's not to say we're totally out of the woods. Certainly, the risks are still there. The impeachment is going to heat up. There are still worries about the economy slowing. But the fact of the matter is that slowing is still growing. And the fact of the matter is that even as companies' earnings growth is starting to slow down, it's continuing to be positive. And that should continue to cushion markets as we move forward. Are we going to see more volatility? Absolutely. But with the fundamentals fairly healthy, we should actually see once again that volatility cushioned. And as we move forward, we're actually moving into a more favorable time of the year. And that should also be a tailwind. What'll happen? I don't know, but tune in next month to find out. Until then, be sure to check out my blog, The Independent Market Observer, where I provide daily updates on market conditions. And thanks for watching.